Okay, happy Tuesday. What is it? Let me take a look at the calendar. I guess I have it up here. October 23rd. October 23rd, that is my date of birth. I got to the party and I did the Smurf. Get it? I got it. I know it's good. All right, so yeah, it's Tuesday, October 23rd, 2018. This is your daily Forex trading strategy session brought to you by Forex.Today, hosted at the Forex.Today YouTube channel. Please click the subscribe button and you will be brought directly into the webinar. If you happen to be available and you want to attend, you just click a button, boom, you're here. Please leave a like. That way I know I'm on topic. If you're watching a recording, please leave your questions. I read all the comments, so leave a comment with what you'd like me to cover. If you like my chart setups and layouts, the download link is in the description of the video, all that kind of stuff. So I suggest today we start with the calendar. We got some important things coming up, and then what we can do is go through all the normal yen pairs, dollar pairs, gold and oil, and all that kind of stuff. And that should probably consume 90 minutes, huh? Let's go. Never text and do webinars at the same time. It's dangerous, son. Jeez, there's nothing I can do to make these glasses clean. Unbelievable. So, anyways, hey, some interesting things going on. Let's open this up. I'm zoomed in quite a bit. Okay. So Carney's going to speak later today. Should be a big market mover. FOMC, Bolstick. I don't even know this person. They keep switching out these FOMC members. I'm like, who's that? Man, getting old. There's so many kids that have been on the FOMC, I can't even keep up with them now. Hey, FOMC, get off my lawn. Anyways, I was going to scooch this all the way to tomorrow, Wednesday. This is going to be the big one for kitty cat, so maybe you want to start trading that today. Maybe you want to start looking at cat. Get a little more light. Beige book is a very interesting one because it's actually something that's passed around at the FOMC meetings. It's actually pretty important. New Zealand, boy, oh boy, oh boy. I read something over the weekend. I just read the headline. I didn't read the actual article. But the United States is now dumping milk down the sewers. The farmers got paid. Don't worry about that. Probably not very much, but anyways, the government's buying the milk and then dumping it down the sewer. So that can't be very good for New Zealand that exports a lot of dairy. Zambia! I love Zambia. Africa. So good morning, Emmanuel from Zambia. So anyways, that can't be very good news for New Zealand if the world has so much milk, we're dumping it. German IFO, interesting. Euro interest rate decision, obviously. Monetary policy, obviously. That's pretty good. So that's way out on Thursday. This durable goods stuff, it's so volatile. I've never really seen that it was overly relevant to foreign exchange traders. Pending home sales is interesting, especially if there's a relative change. So one of the things you want to look at is not just home sales and stuff, but vacancies and inventory and all that kind of stuff. I haven't seen any red flags yet. A friend of mine, though, I was at his house over the weekend, and he owns, I don't know, 7 or 8 houses. And we were talking about that. I'm like, well, I'm interested in relative changes in the industry. And he said, well, one of his tenants moved out because they saved enough money to buy their own house. And of course, at some point, there's renters do get back on their feet financially, and they do want to start buying. And typically, maybe that would increase house sales. But he says it's very difficult to get renters now compared to what it used to be. And I said, well, maybe you don't have a typical house. I said, why don't you go out and look at what's available and pretend that you are renting a house and see if it's competition, because if it ain't interest rates, if it ain't, what is it? And he's like, yeah, well, it's one of the nicer houses. And I'm like, okay, well, whatever. But you want to look at relative changes in these. So just a headline pending home sales doesn't matter that much, but a relative change in trend relative to, let's say, long-term averages and even short-term, really, because what's been happening over the last, let's say, 8 months might be important, but also where are we on the 30-year average? Actually, real estate cycle is 18, so where are we relative to the 18-year cycle? Anyways, Russia has an interest rate decision on Friday. Okay, personal consumption, GDP, all this kind of stuff on Friday. Obviously, really nice. Baker Hughes is good for oil. So yeah, so a pretty decent week, right? Just enough to keep the skids greased, I guess. Just enough juice. So far, pretty good. It's only a Tuesday. Yesterday was fairly calm, right? Kevin Starr says, what? I missed it. Sorry, Kev. All right. So let's just see where we are. This I had heading up and then down. It didn't quite head far enough up. I really wanted this to be a plan A and a plan B. Instead of just sort of monkeying around. So how are you going to trade this? There are 2 choices. Captain Obvious, up or down, right? Could you see how a bull might be interested in at least thinking about buying this? Even if you're a bear, let's just say, could you reason that a bull might consider this a buying price or buying zone, let's say? Okay, so that could be one. How the numbers is, oh yeah. Yeah, okay, yeah, Kev, yeah. Well, that's the difference between news and fundamentals, right? There's often news is just volatility. Fundamentals is analysis of economic data, quite different. All right, so that is one possible, right? Something to that effect. Should a bear sell now? No. So bears, if anything, they're not going to add to the positions, right? And that's really what it comes down to. Even if it is bearish, it'd be very unwise for existing bears, they already exist in this bearish land, to add to their positions, right? Now, if they, let's use an ellipse, okay? selling here was pretty logical, right? Down, 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 up, up, sell. Okay, so that makes sense because that's resistance. This is role reversal, all that kind of stuff, right? All of that makes sense to me. But they cannot add any more here. So that makes, if any bull comes in, it makes them vulnerable. But also, some bears are going to get out, right? If you knew, if you had sold way up in here, by the way, and let's mark that. Okay, let's mark that. This is the bearish entry for the week if you're a swing trader. Okay, but based on that sell, you should be taking profit. The top line, the top part here, if you're conservative, this is where you take profit. If you're aggressive, you take there. And the difference between conservative and aggressive is basically your confidence level, right? You might say, well, it's early in the week, it's all good, there's no bulls and all that kind of stuff, okay? So what would a bear do to get back into this? Well, you'd need a reasonable pullback again. You might have already had it, but maybe again and then down. Or a bear breaks, pulls back, and then tries again. So maybe something more like this. Okay, but the psychology, I think, is what is important here. At this price, I'm just getting rid of this. At this price, where we are now, is not a good place for bears to sell. That's already happened. Okay, that's the most important thing. I mean, think about it. Like, who'd be selling it now? That would be almost by definition that they would be a bad trader, right? And you see how selling up here, selling high was the better trade, the better trader? Kev says, could it be that it's a ranging market? Yeah, still, we're just testing the bottom of the range, right? So in that case, you're going to get plan A. We just get back to the top of this range. And, you know, let me draw it slightly different with that in mind. Just okay, more like that. Okay. So you have to assume, in fact, it's still ranging. I think bears might live at this pivot again, so they might try again. It's 79.5. It could be that we go all the way back to 80 and somebody sells it. Okay, yeah. But notice the bigger trend seems to be working on this one. Okay. And do you remember having this conversation? We had this maybe 2 weeks ago. Maybe 3 weeks ago, we had this conversation. I spent, I think, one entire day going through all the charts and asking the one question: where are we going? Okay, that supersedes everything else. Is it range bound? Is it not range bound? Wayne, how do I know if it's going to break? How do I know this? How do I know that? And it almost always goes back to the same question. Well, where is it that the market is going? Okay. Okay. This is where we started the month. This is where we predicted we'd be at by the end of the month. right? Remember that? It's interesting now when you put it into context, how beautiful. Triple topped, and based on this number, on the first day of the month, we said, if this triple top holds, we're going down here. But see, most of this is down, which is correct, but it's more than down. It's specifically, we're going to drop from 82 to 78. 78.50, really, right? So we're going to drop from 82 to 78.50. That's really what it says, and that's fairly specific, right? So, you know, is it possible that it's still range bound? Oh yeah, but is it also not? Is it not always? Can it also be possible that we're heading down to the monthly M1? Well, Kev, we set it all up. We talked about it. The swing trading group even outlined that before the end of the month. It's just a swing trade. With that in mind, though, Kev, when I show you these swing trades, do you ever say to yourself, well, that looks a lot better than what I'm doing now? Do you ever look at that and say, well, I could have just shorted at that triple top, and I'd be better off with the 300 pips right now than trading inside this range? And if that's true, maybe you consider the swing trading course. And by the way, I think there's 3 people that want to join the swing trading course. I didn't have time yesterday to send you the coupon code so you can join. Keep bugging me until I do it. You have permission. I have a lot going on this week, as you guys know. Swing trade is a trade. If it's a weekly swing trade, I'm expecting 150 pips. If it's a monthly, I'm expecting 300 to 500 pips per trade. Okay. So it has to do with the time frame, NP. So like, put it this way, NP. If you're trading a 15-minute chart, this is a 4-hour chart. If you're trading a 15-minute chart, can you see that you might have been in 1 million trades inside this range? Many are winners, many are losers, but you get yourself really, 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 really busy in here. And for many newer traders, they come out of this time period, which is now 2 weeks, and you find that you haven't made much money. Now, you worked your butt off. You spent hours and hours and hours every day in this nebula, but you're not much richer for it. In worst case scenario, you're poorer for it. A swing trade, however, is very predefined rules, and you're not trading price, you're trading the market. Okay? And so you're like, oh, this to that. It's all, that's it. That's the swing. Okay? And if you sold here, you're not thinking about taking profit here. You're not thinking about taking profit here. You're not thinking about taking profit here. You're worried about a retracement here, but then it broke through, and then it dropped down, and you're still thinking here. And now, even now, you're still thinking here. Okay. So when you're trading lower time frames, that's primarily not market, but price. Okay, and that's much more tactical than strategic. Like, think about it, right? There's a general planning out the battle, moving these plastic tanks here, and these infantry there, moving the helicopters from this side, and it's all strategy. But for the guy with boots on the ground and, you know, and a rifle in his hand, kicking doors down, it's all tactics. You kick the door properly, or the door doesn't come down. You have your weapon ready, when the door comes down, or you get shot, you know, that kind of stuff. You have to do it right. So this is just pure, you know, the soldier kicking down the door is not worried about the overall strategy that the general planned out. So ideally you can do both, right? And that's where we try to align strategy with tactics. But you know, like for example, if the strategy is you're a bear and we're on our way down to M1, well, you could filter out what you do and just simply look for resistance and sell high, and you just keep selling high. So for example, this circle, going back to NP's question, well, what's a swing trade? Well, the other one I showed you is a monthly. Let's go here. Okay. Oops. 1 click, 2 minutes. Oh, 2. Okay. Selling here and down for, you know, what is that? 400 pips. That's a monthly swing. Okay. So let's say you're a bear because of that. You're a bear because it's a monthly swing down. Okay. And then you drop into a smaller time frame like this 15-minute chart. And the swing trade for the week is sell here, target here. Okay, that's for the week. That was the plan for the week if you're a bear. Now, the interesting thing is it's exactly the same pivots as the monthly. But you would have woke up this morning and you're like, you're already a bear, right? Because you were a bear last week, you were a bear the week before, and the bearish move started 3 weeks ago. And you know that. You know it. You've seen it. You understand it. You've probably written it down. This is going all the way down to whatever that was, 78.50, whatever, right? Because so anyway, so on the first day of the month, it drops. You're like, well, I don't sell down there. And then it comes back up here. And finally, you get your price and you sell there. You know, and at this point, it's just range bound, which means as a bear, you sell at the high resistance. And then it just happened to drop all the way through. And maybe it's broken out. Maybe it hasn't. But this is fulfilled now. This is the monthly trade plan. Sorry, this is the weekly trade plan. Now, to make it interesting, can anybody tell me what you should do as a weekly swing trader? If it's Tuesday, New York is just opening, and we've already hit our weekly target, what's the reasonable thing to consider doing this morning? Take profit. Yeah. Does it make it more believable if I said not only is that a tactical move, right? So like tactically, how do you kick a door down? And then tactically, if you assume behind the door is a guy with a gun, ready, willing, and able to shoot you, how do you handle that situation? You let the new guy go, right? And have him kick down the door. Let me show you how to kick down a door. You do it, and I'll critique you. But anyways, there's a strategy for all these situations, right? There's your tactical move. Well, okay, tactically, if I said, well, it's also a double bottom, how do you play it? Does it influence your decision? Well, it kind of does, because you don't have to get out at M1. You might ride this down to M2. Maybe this is important to you, or sorry, S2. Maybe this is important to you. I don't know. But you have to decide, do you take profit here or do you take profit there? Okay. I don't know the answer. And then, is it important information to have this? Could be a rabbit, could be. So anyways, that's the thought process. Did I just do sign language? Was that grandfather? Yeah, take the head off. Take a bow. Sorry, I just haven't had time. I'm not even combing my hair. Not even combing my hair. That's how little time I have. All right, so I just wear hats. Roy. So we got CAD news coming up, right? There's a buy and a buy. What's that sell all about? I don't know what that sell is all about anymore. Anyways, I can see the plan A and the plan B. I know. I shouldn't be wearing a hat, though. It's not professional. So, one of my classes, there's about 120 people in it, and I'm doing my homework, and it says, it gives the stats. It says, what would you do in a situation like this? And it gives you A, B, or C. And then the next thing, once you answer it, it says, oh, well, of your class, this percentage said A, this other percentage B, this other percentage C. And then it said 14 out of 120 people have answered the question, which means there's only 13 people ahead of me in the homework. So I'm racing ahead. There was a time I was almost 2 weeks ahead in the homework, but anyways, I have to do that because I'm going to spend all that time in Cambridge this weekend. You know what? So let's move over. Someone wanted me to do Swiss franc. Let's look at Swiss franc. A friend of mine is interested in buying a company in Switzerland. And so one thing I should advise him on is the currency exchange. So if he has euros, should he pay in euros? Okay. So do I want this to go up, or do I want this to go down if I'm going to buy a Swiss company? Real world question. Well, you answer that, I'll take a look around here. That might be important. Yeah. Okay. So I want a weak Swiss franc relative to the currency I have. And if you were rich enough to have 3 or 4 different currencies, then you would also do a relative strength exercise, but you'd also want macro because you want to say, well, you predict this will be the best currency to do this with over a period of time, maybe, right? Okay, I'm also going to mark this. I've already done it for you, but we'll do that, okay? So what happens next? Well, I've kind of found a top and I've kind of found a bottom. So let's get off the weekly chart and go to a 4-hour chart. Okay. Look at this, plan A, plan B. I hope you guys are getting there, even just mentally. Let's say you're not actually putting together the trade plans and you're not actually banging down the pips and stuff. But I mean, this goes back to early September, right? You know, plan A, plan B, plan A, plan B. Inevitably, most of our plans, whether it's A or B, one of them almost always works, right? And they're not radically different trade plans. It's not like, you know, I'm setting it up so either way I'm going to be right. No, it's the same trade to me, right? So we buy, if you remember, we were way up here, right? We were at this line. And I said, okay, we need it to fall so we could buy it. We could look left here. There's support, support, support. We can play it like an inverse head and shoulders, which would take it off the right shoulder and we would head up. And you can see I measured the size of this, so then I predicted a move up to here. Or if that doesn't work, you could play a double bottom if you were a bull. So here's the double bottom, and here's where it is, and that does that, right? I mean, they're not radically different trade plans. It's like, well, if you're a buyer, I'd buy this, and if that doesn't work, I'd consider that. But I'd prefer this. And sure enough, plan A worked. Right? So I hope you're getting used to the mental process, if you will, building emotional and mental fortitude to put these plans together. Because that's truly what it is. I don't think it's intellect, really. But anyways, off we go. So now I've identified this as an area of concern. I want this to go up, but for whatever reason, by analyzing the weekly chart, I say, I guess I'll do daily chart. By analyzing the daily chart, I say, well, I think we're going to have some quiet time in here, right? Okay, so now what do I want to do? I got to look for support and resistance. So if I was a buyer, where would I want to buy? All right, so let's. Okay. So right now we're caught in the weekly pivots don't seem to matter that much. Do we want to trap it sideways like this? Call that sort of the consolidation. Is this a buying opportunity now? It could be. It's not. There's nothing really going on as far as the pivots. There's not a lot going on. You just would trade it, right? As this being a top, right? And this being a bottom. That's all it is. So there's a range inside of our basically dead zone, right? Or should I call it the neutral zone? But you might be able to buy it, and then you would assume it goes up to the next level, right? That's your bias taking over. So let's try to answer a different question. Where is the market going? So let's clean. I'm going to delete everything here. Start clean charts here. Where are we going? Okay. Okay. You notice it's a front run. And by front run, I mean on the last day of the month, maybe even the last 4 hours of the month. We were at the M2. So you could have done this the last 4 hours of September. And then by the end of October, so by the last day of October, the theory is we should hit this price. We knew that here. Now you say, well, Wayne, how did you know it was going to go there? Oh, I never said that. I never said we knew it was going to go there. But if you were a swing trader and a buyer, that's exactly the price you want, and that's exactly the price you want to consider taking profit. If you're a bear, you would have done it this way, and there is nothing else. There is nothing else. That's all there is in the entire world. And if you sold here, okay, so you only made money for a day or two. But then it got down to the exact price level you figured you'd be challenged, and you were challenged, and you lost the challenge. But it's not surprising, right? You wouldn't be surprised. You're just like, oh, well, I guess this month ain't my month. And by the way, you buy Swiss franc when you think things are bad. Okay. So many of you know that the third week of August is important to me. That's when I start considering things to start improving, right? So where do we want to mark that? That's what, in here maybe? Okay. Oh, it ain't perfect. Don't expect it to be perfect. But maybe things have turned around. Maybe things have improved. Look where we were. All right. So maybe this is improved. Follow where we are now. Okay. And you can see this is quite predictable, like I did before. It's very predictable that this was going to be resistance. The question now is, you see this here? This thin gray line? Do you think this thin gray line is important? Should we treat it as being an important area? That's where we are now. Kev says, well, what about parity? Irrelevant. So what? Okay. The Swiss care a lot more about Europe than they do about the Americanos. Okay. Look at all these wonderful trade plans. Just gorgeous. Got to decide, is it role reversal time or not? Okay. Now I want to skip this. It's all the same. I do want to look at USD Swiss franc. There's Aussie. Let's switch this out. Okay. What do you think? Is it a good time to buy a Swiss company with American dollars? No, USD Swiss franc itself isn't irrelevant, but it's not what it's all about. I mean, dollar's going to move because of dollar. Swiss is going to move because of Swiss franc, but the Euro Swissy is much more relevant to economic activity than USD Swissy. But you need to think of Swiss franc more of a risk-on, risk-off currency. If macroeconomics are bad, Swiss franc gets strong. If macroeconomics are good, Swiss franc gets weak. Okay. Chuck says, yeah, this month would be good. Okay. Yeah. But parity, I don't care about parity. Who cares? Okay. Could get better. Could be better though. Amazing, right? You think the dollar's strong. How about the Swiss franc? Hey, Kevin, I was trading the day that the euro became worth more than the dollar. It was newsworthy. Didn't mean anything. But interesting, right? Swiss franc was $1.78, and we're all happy about parity. Who cares about parity? Look where it used to be. Look how long it's been down here, right? It's been down here since 2010, since the financial crisis. Okay. But if we have another 5-year rally, right, we could be up here, $1.32, right? That's what I'm trying to say. Like, there's no reason to be whining about parity, right? We should be 20. Let's say we should be 25% higher than that in 5 years. Yeah. Well, they have negative interest rates. That's how much they're trying to weaken the Swiss franc. Okay. So just be cautious, be careful. But yeah, relative to the last few years, the Swiss franc is much more affordable. But parity, okay. So like again, let's say you're a businessman that's been around for a while. You're still going to say, well, we're still basically at parity on USD Swiss franc. Like, if I can just wait 5 years, I'll just on the exchange rate alone, I'll do 25% better. Okay. Was it that long ago? Well, I was there when it happened. I was staring at a chart. I watched it. But anyways, yeah, so to a businessman that's been doing this a while, the argument could be like, why can't we just wait for it to come up here? Okay, so that's 14% better, right? But if it could be many tens of millions of dollars, depending on the value of your company, right? The company that you're trying to buy. So if you think the Swiss franc is going to weaken over the next 5 years, you might just say, well, wait. The other argument is, well, it's already gone from 75 to parity, so you're up that percentage, right? You're already up 30% relative to 5 years ago. Well, actually now it's almost 8 years. Well, 8 years ago. But if it continues to go up, you would have gotten a better deal. Every day this goes up, the more you pay too much. February 2000? Yeah, I mean, I don't know when it was. It seems about right. Yeah. But all I remember is that was it. I'm like, oh, wow. All right. La 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 la. All right. So let's do gold and oil. Kevin, it means you pay money. It means you lose the carry. Oh, in this case, like for example, you don't buy the Swiss franc, right? Well, Yeah, depends. Of course, it depends if you're buying or selling, but you would earn interest. They pay you to borrow money. So typically, you pay an interest rate when you borrow money, right? So you want to buy a house, you need $1 million. And they're like, okay, you got to pay 5% annually. So you pay 5%. If they said, well, you have to pay -5%, that means you earn 5%. They pay you 5% to borrow the money. And you say, well, that doesn't make sense. Like, yeah, it's a pretty new thing. But in this case, Switzerland wants the Swiss franc to weaken. So they'll pay you to borrow money, and the supply of money goes up. And the value of each individual Swiss franc goes down with the increase of money supply, in particular through the fractional reserve banking system. So the Swiss franc weakens. And then you say, well, why would a country want their Swiss franc to weaken? Well, Switzerland exports. They export banking services and cuckoo clocks, cheese, and chocolate. Okay? So who do you think they export all this stuff to? Europeans, because you have Switzerland, a little country, and all around it, it's completely surrounded by Europeans, aka euros. So they want their currency to be affordable for those with euros, because they want to sell a whole bunch of stuff to Europeans. Now, if the Swiss franc gets too strong, too valuable, too expensive, then Europeans will just say, wow, yeah, Swiss chocolate's great, but I think I'll just buy some French chocolate, right? Or you're like, okay, Swiss cuckoo clocks are good, but I think I'll just buy some German cuckoo clocks because they're in euros and there's no difference, right? So ideally, Switzerland would like to have a weak currency so that a European says, well, French chocolate's all right. German cuckoo clocks are okay. But the real deal is Switzerland, and in fact, it's even a good deal. So I'm going to buy Swiss 100% of the time, right? Okay. That's the thinking, right? So they'll want their currency to weaken. Yeah. So gold's moving. Minster's happy about it. So if you recall, that was plan A. The preferred move was a little further down. I think we had a 382, wasn't it? In this case, the more aggressive trader has won, plan A versus plan B. But we don't have a plan for selling it. We only have 2 plans for buying it. Right? So that, like, this whole idea of like, yeah, gold, go, baby, go. You're like, well, I guess it's moving quickly. It only took 3 days, but sure. Rand? Maybe. Well, Reb, I get this a lot, and the reason it looks out of control is that you were not here for all the trade plans. So I leave them. Okay? To me, it's like notes on a pad, but well, and I guess you're going to say that's a lot of lines too. Yeah, you know what? It must seem like it. I only see what I need to see, right? So, yeah, if that's too many lines, I apologize, but this is important information. I'm only looking, like, for example, the first thing I look at is the monthly pivot. So the only thing I look at is this. And then I don't look at it anymore because I know we're going here. Okay? And then within that, then I say, okay, how do I play this double bottom? And then I look at the weekly pivots, for example. How do I play this low off the monthly? And I say, oh, well, it's a weekly, so we're going here. And then I try to fit that into here and stuff. So, yeah, I guess if you don't know what this stuff means, it does look really messy. There's not a lot I can do about it. I mean, I can kind of cheat a little bit. So let's go to these weeklies. Yeah. So let's do this to like 2 instead of 5. That'll clean up a lot. Okay. I could even do it less than that. I kind of like looking at last week's pivot. So, you know, sometimes I look at the moving averages. Very often I'm not, but I can be. So yeah, so it's just how it is. Yeah. Well, the thing is, what I would recommend Reb is that like these are pivot points, bro. Unless you're Rebecca. So Reb, to me, it would be there's not a lot, as most people know, there's not a lot that I think you have to have as a trader. You need to know price action, but price action's invisible, right? You don't need lines for that. So you could totally delete these moving averages. Okay, which I've just now done. You can delete the moving averages completely. All you need is price action. And like I said, we can simplify this stuff quite a bit. Okay, this is all you need. Okay. No, gray gets bullish, so you wouldn't be a seller. Okay, so I would say to you, Reb, you don't need much, but if you're trading without this area here being known as a pivot swing, you're missing something ginormously huge. Okay, so that's all I'm saying. I'm not a believer that you need a lot of indicators. You don't need custom indicators generally and all that kind of stuff. You certainly don't need proprietary indicators. You don't need oscillators. They can be helpful. You don't need them. Moving averages can be helpful. You don't need them. All that kind of stuff. Right? But you will need these pivot points. So I would just recommend that you take some time in there. Yeah. You're strictly price action. Yeah, that's fine. Yeah, and it works for you. Great. Price action's required. You're now missing market, right? All you have is price, which is great, but what you need on top of that, okay? What you need on top of that is market. You have price action. You add the market support resistance to this, and you will be a better trader, is what I'm saying, Reb, okay? Bach, that is not true, is all I'm saying. Okay, I think it's incredibly important, Buck. It's very, very important. It's like 50% of what's important. The rest is not noise. So price action is a leading indicator, and these pivot points are a leading indicator. So that's that. Oh, no. Okay, you win. You win. Box better. Sorry, guys. So let's go back over into here. Yeah, I guess this needs to be cleaned up too. I guess, you know, we're at that time of the month where things need to be cleaned up. Okay. So go back to the basic questions. Where are we going? Okay. If you're playing it like that, then the target was in here, is where you'd expect consolidation to take place. If you're playing it like this, which isn't very obvious, it isn't very good, you'd still only be expecting that. Yeah, and I'm not disagreeing with that, Mark. What I'm suggesting is you only have half of it. I'm only suggesting you could get better, and, you know, you can't listen while you preach. So that's where we are. Maybe I'm just older. Maybe I'm just an old man. All right. Yeah. So the thing is, I'm just sick of that euro. There's so many better things to be going. So we've done a lot of these, right? Let's go to the, well, you know what? We didn't do pound. We got to do pound. Yeah, look how many trade plans we've put together on this pound. How many trade plans? Up, down, buy. Up, down, buy. Up, down, buy. Up, down, buy. Up, down. Shields up, red alert. Up, sell. Down. Up, sell. Down. Up. Oh, shields up, red alert. Down, buy. Right? Now we get kind of, like I said, I wanted the double top. We didn't quite get the double top. So this is where things get less good. Okay, but we do have the defined lower low, lower high, sell, lower low, lower high, sell, lower low. Okay, and this is where I think things can get complicated. We're down toward our target. Remember, right? We've had this for 2 weeks now. So now we're in the zone where the game might be kaput. Okay? This is kaput territory. Okay? Because now we've gone from the upper end of the resistance to the lower end towards support. What is it, the 22nd? 23rd. So what, we have just over a week until the end of the month. I guess it's a fair amount of time. I was wondering if we should be concerned with next month. Not quite yet, maybe. So now you got to get to, you know, if you're going to sell, you're going to sell in here somewhere. Okay. And if you want to buy it, you know, what you want is kind of, you want to pull back somewhere in here and back up. Okay. So it comes down to like personal confidence level. How far down do you want to take this before you think it's done? Is this good enough? Okay. Support, resistance, support. Is this support? Okay. Did we hit this as a target? Okay. Now the price action, you can continue with this because even this is there's a move in here, in fact, off of this. You can see it up in here into that roll reversal. Let me draw this. Okay. This is the down, up, sell, down, up, sell, down, up. You could still sell this. In fact, bulls want you to sell it. That's the interesting thing, right? Okay. Okay. So it comes down to really what you want to do here. And that's where our money is made. Are you a bull or a bear? Okay. A bull would like a dip. Now, I'm thinking really, if anything, this would be more ideal for a bull. Okay. And bears really would like that. They would enjoy that. So that would be a sell zone for bears. Just, again, that's just simple price action. So this would come down to this level. So let's say it is bearish, okay? What's it going to look like now? So let's get this out of the way. Okay. It would do something like this now. It's going to drop. This will hold because it is support. But you're a bear, so your trade plans are going to look somewhat like this, okay? Now that's support, so that will also hold, also creating a new lower high. And then the lower high will probably kick off that. So I'm going to drag this across now. Oops. Okay. But criticism is not bad. Disruption is not helpful. It's destructive, not constructive. And I don't like how you call people in this room kids. It's disrespectful. So if you're respectful, that's cool. So just be part of the team, or you're welcome to stay. Okay, so if you're taking down and up, so now we're going from, like, let's say from an hourly chart down to like a 15-minute or even a 5-minute chart. This is where you're taking a little bit more strategy and then adding tactics to it. Oh, these ellipses don't adjust for time frames very well. Anyways, down, 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 up, up, sell, down, 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 up, sell, down, 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 up, sell. We're missing an up here. Okay. Now, that only gives you a little bit higher time frame. Like you're like, well, Wayne, this is where I'm losing money. Well, first of all, maybe you should work on your strategy before you're doing so much tactical work. But moving into the smaller time frame now, like even a 5-minute chart, if your strategy is it's made a lower low, it's going to retrace, make a lower high, so somewhere near a roll reversal, I want to consider re-entering short. Okay, what would it look like on a 5-minute? And that's now what we're breaking, right? That's where we're kind of moving into that, right? Okay, that's all. So down, 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 up, up, down, 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 down. Now, it's the same as this. The only thing we're changing is the time frame. In a similar fashion, like, was it Aussie yen? The monthly swing for 500 pips was the same as the weekly swing for 100 pips, right? You see what I mean? Like, it's exactly the same pattern, just a different time frame. And in this case, we're trying to take an hourly or let's say a 4-hour strategy, which is just sort of we're going this direction, we're using price action, we're using support and resistance, okay? But we're going there, knowing that price ebbs and flows, right? Or how about this? Knowing how a caterpillar walks. Bloop, 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 right? If you know where it's going and you know how it walks, then you can predict a lot. Maybe how long does it take an inchworm to move a meter, right? So in this case, we know price is going to go, up and down. And if we believe we're heading lower, then it needs to have more downs than ups. So, but we know that we're going to be challenged, right? When do you get an up in a down move? Every time you approach support. So we can take all of this and have some basic assumptions. We believe it will go lower. Great. Are we in that market now on this 5-minute chart? No. We're in a situation of higher high, higher low, higher high. So whoever's bullish they're going to want to buy this. They're going to want to buy this. If I was a bull and all I saw that was this, I would buy that all day, every day. Okay? What they might not see is the bears that were staring at this price and are waiting for confirmation. Okay? So they're going to want to sell in here. And whoever wins this battle is probably going to, in the course of this next half an hour, will probably win the battle over the course of the next few hours. Okay? So this is the down, 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 up, up, sell if you're a bear. Okay? And if you get that right, then it's simply going to fall to the next level of support, in which that will be plan B for bulls. And then we'll try again. And it'll come up, right? And then plan B for bears would be, come on, man, sell off that shoulder. Because they plan on heading lower. Up, 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 down, right? When does the confidence start to kick in? Maybe here, but definitely here. Right? Well, it's nothing to like. It's just because that could be beautiful and be flawed, right? It's just how you take your strategy, which is your trade plan. Boy, I'm trying to get rid of this. These just don't resize very well. Okay. It comes down to, do we recognize the support and resistance? Bears should not sell at support. Bulls potentially could buy at support. Bulls should not buy at resistance. Bears could potentially sell at resistance. So it's really you getting, where we are in the move important, knowing where a bull would buy and knowing where a bear would sell is a lot of the game. And then having an idea what you want it to do is helpful to discern whether you should be aggressive or conservative within the move. So I look at this, I'm like, well, this ain't trending. It's not beautiful. If I was a bear, I'd feel better about it because in this case, we don't have a higher high, and in fact, we might get a lower low. So that's very, very helpful to a bear, right? And a bull would say, well, but they don't have a lot of, evidence, if you will. We were buyers here. If you remember at the beginning of the month, we were buyers here, and we were hoping for the higher high, and in fact, I was actually hoping for a double top, and we didn't even get the double top. So, I lose a lot of confidence. Now, you can be a bear driving it down here, but no matter how bearish you are, at some point, okay, at some point, selling again is just dumb. Mr. Heibel, one place to start is Google it. Remember when I started back in the day, I wrote down everything that came up that I thought was interesting, that I thought I might want to know. I wrote it down and I simply researched it. So I've never taken advice from someone else, and I've never learned from somebody else, but I have done a lot of research, and that's a really strong way to develop, even at a level, just personal confidence, right? So I've gone on too long today. I apologize for that. Have a wonderful Tuesday. Remember, we got the Carney speech in, what, 2 hours or something like that? 2.5 hours? Thank you for being a client to Trader's Way. If you are new, please visit Trader's Way and allow us the opportunity to earn your business. Once again, Bach, you're walking in and on a tight rope. I think I've been very polite, but also clear. Be respectful. So don't forget to like and subscribe and all that. It's important. So peace on earth. May the pips be with you. May your profits be above average. Yeah, and good night for the Aussies and the Kiwis. Yeah. Nuno, it's too early for peso. Ask me in a week. I only trade peso at the end of the month. Cool, guys. Cheers.